The European Central Bank delivers a package of moves Thursday to kickstart the Eurozone economy, including cutting interest rates, expanding its asset purchase program to 80 billion euros, or about $88 billion a month, and a new program of cheap loans for banks. One result, immediately after the announcement, the value of the euro dropped and then spiked. Here with analysis is Luca Paolini, chief strategist at Pictet Asset Management, one of Europe's oldest private banks with around $150 billion in assets. Thank you so much for joining us, Luca. As one of Europe's top investors, did any of this surprise you?
No, in a way, it was not a surprise that the ECB did what they did. I think the surprise was the inclusion of corporate bonds in the asset purchase program. This was probably a surprise, but we were not surprised by the cut in interest rates. It was actually expected.
And so do you think that a move this big is necessary?
I personally don't think so. The European economy is still growing around 2%. I think it's really an issue of credibility by the European Central Bank. They keep on saying that the target is 2%, inflation is 0. They have to do something. So I don't think it's required, but in a way, the ECB is forced to do more in a way.
All right, so let's talk about these negative interest rates. A lot of people say, what does that mean? How does this work? Is this unprecedented for a central bank to make a move like this?
No, we have seen also the Swedish central banks, the Danish central bank have done the same, Japan. So it's nothing really new. The question is more like, is it going to help the European economy? What we know is not great for the banks, because obviously margins for the banks will go down, and it's still unclear what the impact will be on the European growth.
For long term, for the currency, could it weaken the currency?
It's also difficult to say, because you've seen actually the euro rebounding. So I think it's over the long term, you have to assume the negative interest rate should be negative for the currency, but it's not that obvious. And we see the same situation in Japan, by the way.
Absolutely. So how do you see this news impacting U.S. markets?
I think it will really be on, I think, the question on what this additional liquidity will do for markets overall. I think that the ECB will not move markets globally. I think it's a positive move, but I suspect that the key issue is growth more than liquidity for the next few months.
And so what areas of the world right now do you specifically have your eye on?
Well, we like European equities. We like especially small caps in Europe. They're more focused on the European recovery. We like Japan because of valuation, and we are starting to add some exposure into emerging markets as well.
What about other currencies?
Well, in currency, we think the euro will get a little bit stronger. I think the yen has reacted already too much, so we expect the yen to be weaker. And we really see very limited upside for the dollar. The dollar is the most expensive that it has ever been, actually, on our models.
Now, how do you think a move like this will be interpreted by U.S. monetary officials? What will the Fed make of this, do you think?
I think the Fed has to look at what other central banks are doing, because if they hike when everybody's cutting, obviously the risk is that the dollar will go higher. But I don't think that it will look at this as a major event. In a way, it was expected, and there are only some technical factors that were surprising. Otherwise, I think the Fed will continue to do what they will do. So they will hike rates, but at a very, very slow pace.
Now, what about this program to give cheap loans to banks? Will that help offset some of their losses for the lower interest rates?
Well, I think the banks in Europe, they're not in terrible shape. I think there are some banks, especially in Italy, that are suffering. I think it's an important decision. I think it will help the banks. But the key issue is about growth. It's about growth, and growth is picking up, but it's still not strong enough, maybe, for the banks to generate the income that they need.
And you think this will help?
I think it would help, but it's not. I don't think it's enough.
What else would you like to see done?
I think we need some fiscal stimulus. I think especially the German government should do a little bit of more stimulus, cut the taxes. I think that's much more important than just monetary stimulus.
Luca Paolini, thank you so much for that analysis.